Okay, so how do you even begin to navigate this crazy world of digital assets and DLTs? I mean, it feels like every week there's a new platform, right? Claiming it's the next big thing.
Oh, absolutely.
Yeah.
It's overwhelming. Everything promises to revolutionize everything.
It's easy to get lost in all that noise, isn't it? Trying to figure out what's real, what's just hype.
It truly is. And knowing where to focus what actually makes a technology different, that's the challenge.
Yeah, exactly. And that's why we're doing this deep dive today. We're looking specifically at Hedera and its token, HBAR.
Right.
Our mission really is to just cut through that noise, look at the tech, the unique governance, the real world use cases, which are pretty impressive, and what the market might be telling us.
And we've really dug into it. We've got a stack of articles, research, all sorts of insights, charting Hedera's journey from the tech foundations right up to its role in big business solutions and finance.
We want to help you make sense of it all.
Exactly.
Okay, so let's get right into it. Hedera. You hear public distributed ledger, you think blockchain. But that's not quite right here, is it?
No, that's the first key thing to grasp. It is a public DLT, but it's not built on a traditional blockchain. It uses a different kind of consensus mechanism called Hashgraph.
Hashgraph.
And its structure is what's known as a directed acyclic graph, or DAG.
A DAG, so less like a chain of blocks, more like a web.
Kind of, yeah.
Yeah.
Think of it allowing transactions to be processed in parallel, simultaneously, rather than one block after another in a line.
Ah, okay. So it avoids that bottleneck problem you get with sequential blocks.
Precisely. And that's where the performance difference really comes in. It unlocks some serious advantages.
Right. So what does that parallel processing, that DAG structure, actually mean in terms of performance? Like speed?
We're talking high speeds. Hedera consistently clocks over 10,000 transactions per second. Maybe even more now.
10,000. Compared to, what, Bitcoin at like 6 or 8?
Exactly. Bitcoin's around 6.8 TPS, Ethereum, maybe 12, 15 on its main layer. And Hedera gets transaction finality, meaning it's confirmed and irreversible in just 3 to 5 seconds.
3 to 5 seconds, that's fast.
It's incredibly fast. And that speed, combined with low cost, opens up completely new possibilities, especially for things like micropayments or high-volume data logging.
Okay, speed's one thing. What about the cost? Transactions fees can be a killer on some networks.
That's another big plus for Hedera. The fees are famously low and crucially predictable. We're talking fractions of a cent, typically around 0.00001 per transaction.
Wow, so genuinely usable for microtransactions then.
Absolutely, and that predictability is huge for businesses trying to budget or build sustainable models.
And energy efficiency, that's a constant criticism of older blockchains, the proof-of-work ones especially. How does Hedera compare?
It's drastically different. Because it doesn't use that energy-intensive mining process, its energy consumption per transaction is tiny compared to Bitcoin or even many proof-of-stake networks.
So it's much greener.
Much greener. It uses a fraction of the energy, which is a major selling point for enterprises focused on sustainability, ESG goals.
And has security.
Yeah.
If it's that fast and efficient, does it compromise on security? What's this ABFT thing?
No compromise there. It achieves asynchronous Byzantine fault tolerance, or ABFT.
Which is considered the gold standard, right?
It is. Essentially, it means the network is secure and can reach consensus correctly even if up to a third of the nodes are offline or acting maliciously. It ensures transaction finality and prevents tampering. Highest level of security for a DLT.
Okay, impressive tech. Let's talk about HBR, the token itself. What role does it play in this whole system? You mentioned it has a dual function.
That's right. HBR has two main jobs. First, it's the fuel for the network.
Like gas on Ethereum.
Exactly like gas. You need HBR to pay for any transaction fees, for using services like the Hedera Consensus Service, HCS, or the Hedera Token Service, HTS. It powers the network.
Okay, fuel. And the second role?
Security. HBAR is staked by the node operators, those council members we'll talk about, to weight their votes in consensus and protect the network from certain attacks like Sybil attacks.
And the supply is fixed.
Yes, a fixed total supply of 50 billion HBAR with a controlled release schedule over time. This prevents concentration and helps maintain network stability.
Okay, that controlled release and fixed supply sounds designed for stability. Now let's pivot to that governance model. This seems to be a really big differentiator for Hedera, especially when attracting businesses.
It absolutely is. It's probably one of the most talked about aspects. Hedera isn't governed by an anonymous or loosely defined community in the way many blockchains are.
Right. It has this council.
Exactly. The Hedera Council is made up to 39 globally recognized organizations. Think major corporations, leading universities, top Web3 companies.
And these aren't just passive members, right? They're actively involved.
Very actively. They run the initial network nodes, they steer the strategic direction, they vote on software updates, manage the treasury, set network pricing policies, the whole 9 yards.
And they all have equal weight.
Equal voting rights, yes. And term limits. So it's designed to prevent any single entity or small group from dominating. It's a form of decentralized governance, but with known, accountable organizations.
And the names on that council are pretty significant. You've got Google, IBM, Dell, Chainlink Labs, BitGo.
Mondelez, Tata Communications, Avery Dennison recently joined, Blockchain for Energy. That's a serious list.
Now, that corporate backing obviously provides a lot of trust for other enterprises, but some crypto purists might say, well, that's not truly decentralized like Bitcoin or Ethereum. How does Hedera position itself against that critique?
It's a fair question that comes up often. Hedera's argument is that this model provides the stability, the legal framework, the accountability that large enterprises need to actually deploy mission-critical applications on a public ledger.
So it's decentralization tailored for enterprise needs.
Exactly. It's about building trust through known entities, ensuring long-term stability, and providing a clear governance path. They call it a trusted network for enterprise-grade applications. It's a different philosophy.
Okay. So with that governance and tech in place, what specific services are attracting these businesses? You mentioned HCS and HTS earlier.
Right. So the Hedera Consensus Service, HCS, is huge. It basically provides a trusted, verifiable, tamper-proof log for any kind of data or event.
Like a notary service on steroids?
Kind of, yeah. Think supply chain tracking, audit logs, secure messaging, verifying credentials, anything where you need an immutable time-stamped record. Industries like banking, logistics, healthcare are all over this.
Okay, HCS for data integrity. What about HTS?
Hedera Token Service, HTS. This makes it incredibly easy and cheap to mint, manage, and transfer both fungible tokens like stablecoins or loyalty points and non-fungible tokens, NFTs.
Easier than on other platforms.
Arguably, yes, especially for enterprise needs. It has built-in features like configurable compliance rules, KYC, AML checks account, freezing, supply management, all natively on the ledger, not just layered on top with smart contracts. And again, with very low predictable fees.
That sounds powerful for asset tokenization and smart contracts. Can developers build dApps?
Absolutely. The Hedera Smart Contract Service, HSCS, it supports Solidity, the language used for Ethereum smart contracts, and it's EVM compatible.
EVM compatible, that's important. Means easier migration for developers.
Huge advantage. Developers familiar with Ethereum can bring their skills and even existing code over to Hedera relatively easily. And those smart contracts benefit from Hedera's speed and low costs, so you can build fast, cheap dApps for DeFi, gaming, whatever you need.
Okay, solid tech, unique governance, key services. But as you said, the real proof is in the pudding adoption. Where are we seeing Hedera and HBAR actually being used in the real world? Because that's what ultimately gives a token value beyond speculation.
This is where it gets really interesting, because the list is genuinely impressive and spans so many industries.
Give us some highlights. Let's start with payments, maybe DeFi.
Okay, Shinhan Bank in South Korea. They've been using Hedera for stablecoin-based cross-border remittances, faster, cheaper international payments. That's a major bank using it for real financial transactions.
That's significant. Any others?
EFT POS in Australia was exploring it for micropayments. And there's a new platform coming, HBAR, aiming for Q3 2025 launch. It's a private, regulated platform specifically for stablecoin payments and digital asset management using Hedera tech.
Institutional interest seems strong there. What about supply chain? Always a big promise for DLT.
Avery Dennison's at Daybay.io platform. This is massive. They use Hedera to track billions, literally billions of items through supply chains.
Billions.
Last count I saw was over 10 billion products tracked, assigning unique digital IDs, providing end-to-end transparency. That's scale. Aero Electronics, another council member, is also working on supply chain solutions.
That kind of scale really tests the network's capacity. Healthcare. Data integrity is crucial there.
Definitely. Safe Health Systems uses Hedera for verifiable patient record logging, focusing on privacy. There was a project with the NHS in the UK tracking vaccine temperatures during the pandemic, and there's ongoing work using it to combat counterfeit pharmaceuticals by creating verifiable records of origin.
Critical applications. And asset tokenization. You mentioned HTS being good for that.
Yeah, DLA Piper, a major global law firm, uses Hedera through its Tuaco platform for tokenizing assets. including potentially real estate. LG used Hedera for its NFT marketplace, LG Art Lab. There's a company called Walltech reportedly tokenizing billions in luxury items.
Okay, so finance, supply chain, healthcare, tokenization. What about just general enterprise operations, automation, identity?
Huge area. ASDAX uses the Hedera consensus service to process millions of transactions a day, like 2 million, to verify ad impressions and combat fraud for major advertisers.
2 million a day.
Yep. Then there's the Coupon Bureau. This is fascinating. They're migrating the entire U.S. coupon industry, from traditional barcodes to new universal digital coupons running on Hedera.
The entire industry.
That's the plan. Eventually handling coupons for maybe 75% or more of the U.S. retail market. Think real-time validation, fraud prevention, better data for brands. It's a massive infrastructure play.
That's genuinely transformational if they pull it off.
And you have ServiceNow, a huge enterprise workflow company, using HCS for tracking digital workflows internally for their massive corporate clients. Ping Identity leverages HCS for its digital identity service, Ping Own, which serves something like half the Fortune 100.
Wow.
Mondelez, the food giant, uses it for their digital coupon systems.
Yeah.
Even the state of Texas was exploring Hedera for digital identity solutions.
Okay, the list of real-world, often B2B use cases is substantial. Which brings us back to that point. Some analysts look at all this and say HBR is absolutely undervalued. Why do you think there's still this disconnect between that deep enterprise adoption and maybe the broader market perception or price?
It's a great question, and probably multifaceted. I think part of it is that many of these killer use cases are, as you said, B2B. They're infrastructure. They're not flashy consumer apps that grab headlines in the crypto space.
Right. Tracking supply chains or validating coupons isn't as sexy as maybe a new DeFi yield farm.
Exactly. It's harder to market that deep enterprise utility to a retail audience often focused on speculation. Plus, Hedera's marketing historically focused more on attracting developers and enterprises than on broad market hype. So public awareness, especially in the crypto community, might just be lagging behind the actual quiet adoption that's been happening.
Interesting. So let's talk about that market pulse then. Have there been any recent events, any catalysts that might be starting to bridge that gap?
Yes, definitely. The big one recently was HBAR's inclusion in Grayscale's Smart Contract Platform Fund. That was July 3rd, 2025.
Grayscale, that's major institutional validation.
Huge. They actually removed Polkadot, DOT, and added HBAR, giving it a 5.8% allocation in that fund, alongside giants like Ethereum and Solana. It signals serious institutional belief in Hedera's potential in the smart contract space.
And did the market react to that news?
It did. There was an immediate, though modest, price jump, about 2% right after the announcement, and it contributed to an 11% gain that week. It shows that this kind of institutional signal can move the needle and bring more eyes to HBAR.
Okay, what about from a technical charting perspective? Any interesting signals for traders?
Well, analysts noted the formation of a double bottom pattern earlier, suggesting potential support around the $21 level. Indicators like the RSI moved up from oversold territory towards neutral, around 54, and the MCD showed a bullish crossover on shorter timeframes, suggesting some positive momentum building up. Standard technical signals, but pointing towards potential recovery.
And zooming out from the charts, what about the actual network activity? Is usage growing? You mentioned TVL earlier, total value locked in DeFi.
Yeah, the underlying network metrics are strong. TVL on Hedera's DeFi protocols saw a really solid growth, 37% in US dollar terms in Q4 2024, hitting nearly $170 million. Protocols like Saucer Swap and newcomer Bonzo Finance were driving that.
So DeFi on Hedera is growing.
It is. And stablecoin value on the network exploded up 272% in that same quarter. Broadly, the network crossed 50 billion total transactions by early 2024. So that's a lot of activity, reflecting that enterprise usage we talked about.
50 billion transactions. Okay. So catalysts like Grayscale are important. What other potential drivers are there? And what are the main risks HBAR faces?
Well, the Grayscale inclusion could lead to sustained buying as other funds and institutions rebalance to match. That's an ongoing potential catalyst. Some see the lack of an immediate HBR spot ETF approval as actually positive in the short term, letting fundamentals drive the price rather than pure ETS speculation.
Interesting take. And the risks?
The main risks are still price volatility. HBAR can swing. Its volatility was over 6% in late 2024. And of course, competition. It's a crowded space. You have Ethereum with its massive network effect, Solana with its speed, Algorand, and many others, all vying for developers and users.
Okay, the inevitable question. Price predictions. What are analysts forecasting for HBR, say, for 2025 and maybe looking further out? Keeping in mind these are just predictions, of course.
Of course. For 2025, some forecasts suggest HBR could potentially reach highs around 0.75 cents by the end of the year, assuming positive market conditions and continued adoption. Near-term resistance levels were often cited around 0 to 16 cents and 18 cents.
And longer term, like 2030.
Looking out towards 2030, the projections get more optimistic, obviously depending on sustained growth. Some models suggest HBR could potentially cross the $2 mark, maybe even hitting highs around $2.20. But that's a long way out, and a lot depends on execution and market dynamics.
Any internal developments from Hedera itself that could boost things? New tech, rebranding.
Yeah, they're not standing still. They launched Citadel, their first native hardware wallet, which is important for security-conscious users. There's the Hedera Agent Kit, an AI tool to help developers create tokens more easily. And they did a bit of rebranding. The HBAR Foundation is now the Hedera Foundation. The governing council is the Hedera Council, just aligning the branding, plus the launch of Hashgraph we mentioned.
Okay, so Hedera clearly has a unique approach and strong enterprise traction. But let's be balanced. What are the main challenges it still faces in this competitive landscape? You mentioned Solana, Ethereum.
Competition is definitely number one. Solana, while maybe its TPS claims are debated, is undeniably fast and has captured a lot of developer and community attention. Ethereum remains the giant with the largest ecosystem by far. Hedera needs to keep attracting developers and projects away from these established players.
What about regulatory hurdles or those decentralization concerns?
Regulatory uncertainty affects the entire crypto space, so that's a general headwind. And yes, the governance model, while appealing to enterprises, does draw criticism from parts of the crypto community for not being decentralized enough.
Yeah.
Overcoming that perception and potentially further decentralizing over time could be important.
And building that broader grassroots community support like Ethereum or even Solana, that's still a work in progress.
It seems to be. They have a strong developer community and enterprise support, but perhaps not the same scale of passionate retail user base or meme culture, for better or worse, that some other chains have cultivated. Building that broader engagement is likely still a focus area.
Okay, so let's wrap this deep dive up. Hedera and HBR, they're definitely offering something different in the DLT space.
Absolutely. You've got this combination of, serious performance speed, low cost, efficiency, predictable fees, that unique council governance aimed at enterprises, and a really substantial list of actual real-world use cases already live.
It's a compelling package, especially if you believe utility is the long-term driver.
Exactly. And understanding platforms like Hedera, I think it helps you, the listener, see how this technology is moving beyond just speculative trading. It's becoming real infrastructure for businesses, for finance, for potentially everyday transactions.
Which leaves us with a final thought, maybe something for you to mull over. If the future of digital assets is truly going to be defined more by real-world utility and enterprise adoption rather than just hype, well, how might networks like Hedera, built specifically for that purpose, reshape how we even think about value in this space? And what does that mean for how we all engage with these digital innovations moving forward?